Okay, let us discuss, continue with the impairment loss for individual assets. If the recoverable amount, the RA, is lower than the carrying amount, so we have impairment loss. I put IL. IL is impairment loss. So under the cost model, the impairment loss is recognized immediately in profit and loss. So it go to profit and loss by debiting an expense account and crediting the contra assets accumulated the depreciation and impairment loss. So we have accumulated depreciation and impairment loss. So we have these accounts. Yeah. Or normally we have accumulated depreciation. We use the same account, but we rename it to have this impairment loss. So you're going to debit the expense, the loss, and credit this accumulated depreciation account. Unless for goodwill, we don't have accumulated depreciation for goodwill, you're going to credit the goodwill account straight away. So under the revaluation model, the impairment loss is treated as downward revaluation. So the downward revaluation reduces the existing revaluation surplus. And we do accounting for PPE, we have assets revaluation surplus and is recognized in other comprehensive income. Yeah, the OCI. This is OCI, other comprehensive income. So we have this process. We're going to reverse the revaluation upward that we have done earlier. So we have reversal in that context. Next is about the cash generating unit. Yeah. To calculate an impairment loss, it's necessary to determine the value in use. So you need to determine the VIU, the value in use, VIU. Asset does not individually generate cash flow. For example, for the airplanes, the engine will not generate cash flow. The cockpit will not generate the cash flow. Yeah, it need to have a combination of assets. So the cash flow arises as a result of a combination of several assets working together. So we define CGU as the smallest identifiable group of assets. What is the smallest group of assets that you can identify able to generate cash that are largely independent of cash inflow from other assets or group of assets? Okay, if you have this plane, how much this plane can generate cash for you? So it becomes one CGU. So to identify the CGU or cash generating units, okay, management have to have some judgment and consideration. They know about the business, how management monitor the entity operations. Yeah. Number two, how management make decision about continuing or disposing of the entity asset of operation. For example, the CGU make losses. So the business has an option to dispose or to discontinue the operation of that CGU. So if an active market exists for the output of the group of assets, so the group constitute a CGU, cash generating unit. Okay. Even if some of the output of the group is used internally, maybe use it for your internal process, if the output can be sold externally to the other than your group, yeah, then this price can be used to measure the value in use of the group assets. So CGU should be identified consistently from period to period for the same group of assets. Next is about goodwill. What is goodwill? Goodwill is an intangible asset arises from business combination. We did this last week. If you compare your purchase consideration or consideration transferred with the net fair value of identifiable net assets. Okay, the difference can be goodwill or gain on bargain purchase. If your consideration transferred, the total consideration transferred is greater than the net fair value of identifiable assets, so that difference is known as goodwill. However, if the net fair value of identifiable net assets is greater than consideration transferred, the difference is gain on bargain purchase. So the goodwill should be allocated to the lowest level of the entity level within the entity at which management monitors the goodwill. So in this context, when we have goodwill, maybe from the CGU, so is that when there is any impairment loss, we are going to offset goodwill first. Everything will go to goodwill first. Okay, that is what mean the lowest level within the entity. So the unit to which goodwill is allocated should not be larger than the operating segment. Okay. So impairment loss for CGU, if it's possible that asset of the CGU are impaired, then the management calculate the recoverable amount for the CGU. The recoverable amount is the RA. Then determine the CA and the difference whether your CA is greater than RA. So if yes, then you have impairment loss. Impairment loss. Okay? So this is the basic concept, same concept. So this is the step. Number one, you're going to reduce the carrying amount of any goodwill allocated to CGU. For example, you're going to do impairment for 100,000. 100,000. Okay, and then you check your goodwill is 60,000. So the first thing you're going to write off is your goodwill 60,000. The balance 40,000, you're going to look at other assets other than goodwill. Other than goodwills. Okay, so that is number one. Reduce the carrying amount of goodwill allocated to the CGU. Your goodwill is 60,000, so you're going to offset it to goodwills. But if your goodwill 120,000, so you're going to only offset or remove 100,000 from the goodwill. So we still have 20,000 remaining goodwill. And then the balance, we're going to allocate any balance of impairment loss to other assets. You have many other assets, so you're going to allocate the balance of impairment loss. You're going to share the loss with other assets. The reduction in the carrying amount of each asset is accounted for in the same way as for single asset. So you're going to use proportionate proportion to allocate or to share the losses. Entity shall not reduce the carrying amount of asset below the highest of its fair value less cost of disposal, its value in use, and also zero. Cannot be reduced below zero. That means negative. Okay, now we move to corporate assets. Okay, when dividing an entity into separate CGU, okay, you are dealing with the corporate asset. All CGU generate cash flow but do not independently generate cash flow. All CGU generating cash flow but do not independently generate cash flow. Okay. So in that context, we have two steps in accounting for impairment loss. where corporate asset exists, if any corporate asset can be allocated on a reasonable, on consistent basis to CGU, so we should allocate the corporate asset, maybe the office, yeah, to the specific CGU. Okay, number two, if corporate asset cannot be allocated across the CGU, you cannot put it under individual CGU, or you cannot allocate to several CGU, the entity should compare the carrying amount of each CGU being tested with its recoverable amount, and then from there, you're going to recognize any impairment loss by allocating the loss across the assets of the CGU. So that is how we're going to do. That is compare for each CGU the recoverable amount, and then we're going to record the impairment loss if the recoverable amount is lower than the CGU. Okay, and then we're going to allocate the loss. We're going to share the loss to other asset of the CGU. Okay. If any corporate asset cannot be allocated across the CGU, the entity should compare the carrying amount of the smallest group of CGU containing the corporate asset with recoverable amounts. Okay. Okay. For the assets, when we write off or we record impairment loss, we reduce the value of asset. We debit expenses, credit the assets. Yeah, for example, accumulated depreciation and impairment loss. What if we have reversal? Last year or last 2 year, we reduce the value of asset, whereas in the current year, yeah, you realize that the losses is temporarily, now the value or the recoverable amount is much higher, substantially higher than the carrying amount. So how are you going to do this? Yeah, how are you going to do this? So a reversal would allow entity to write the asset up, mean like revaluation. The asset value will go up and recognize that as an income. Recognize it as an income. So we're going to debit assets and credit income. So that is how you're going to do it. In assessing, there is an indication of impairment reversal, maybe from the same source. Yeah, we have internal as well as external source. For example, the value of property in Dubai nowadays, previously during COVID, the value of property goes down, maybe I'm not sure, maybe 10% or 15%. Since we back to normal life, yeah, and there are so many tourists coming to Dubai, you can see that the value of property has gone up, yeah, recently. So the procedure with a reversal is the same as for determining the impairment loss. So how are we going to determine the reversal? You're going to compare your carrying amount versus recoverable amount. If your carrying amount is lower than recoverable amount, so you have reversal. Reversal. You have reversal. Yes. Okay. So for individual assets, the reason for this restriction is the application of historical cost model. Any reversal of impairment loss of a revalued asset shall be treated as a revaluation increase in accordance with the other standard. For PPE, we have to go back to the accounting for PPE, for example. Okay. For cash generating unit, a reversal of impairment loss for a CGU shall be allocated to the asset of the unit except goodwill. Even though you revalue the CGU upward, part of the CGU before this is goodwill. We are not going to put back or reinstate the value of goodwill, but we're going to share or allocated the increase in value of assets to other assets than goodwill. So the carrying amount of an asset shall not be increased above the lower of its recoverable amount and the carrying amount that would have been determined. So when you want to put the increase of that asset, you have to go back to the formula. It cannot go more than its recoverable amount or the carrying amount that would have been determined. So you have to be careful on this. And finally, what are the kind of disclosure you're going to put in your financial statement on your notes to the accounts? So the ESB, requires company or business to disclose detail about impairment loss. For example, the amount of impairment loss, the amount of impairment loss, the amount of impairment loss or reversal must be recognized in the profit or loss during the period. You have to put it in your statement of profit or loss. Okay. Number two, the amount of impairment loss or reversal on revalued asset should go to OCI, other comprehensive income. Okay, because previously you did revaluation for PPE. It goes to OCI. And when we do a reversal, it will also go to the OCI, other comprehensive income. So during the period for an individual asset, including goodwill or a CGU, entity must also disclose any event or circumstances that lead to recognition of reversal of the impairment loss, the amount of any impairment loss recognized or reversed, and for an individual asset, what are the nature of that asset. So you're going to disclose all these informations, in your notes to the accounts. Okay, and for CGU, you're going to describe the CGU. For example, the CGU is a business operation. Maybe a CGU is geographic area, your branch in Abu Dhabi. You have this is one CGU, or maybe your business operation, maybe your airplane, Airbus. You have Airbus number one. So this is one CGU. The amount of you have many Airbus, you have Boeing also. Okay, Boeing number one, 777 number one. So they have Boeing number two. So this one is each of these is a CGU. Whether the recoverable amount of asset or CGU is its fair value less cost of disposal or its fair value is value in use. This is the normal process. And I think finally is if recoverable amount is fair value less cost of disposal, this will be the basic measurement. So apart from that, you can also measure recoverable amount by using the value in use. This is the PVIF, present value. You use either PVIF or PVIF-A. Then you compare between these two, fair value less cost to sell versus fair value less cost to sell versus VIU, and you choose the larger or the higher value. So this will be your recoverable amount. Okay, finally, the purpose of the impairment test is to ensure that the carrying amount of assets are recoverable, that is, assets are not overstated. Asset overstated means you going to deceive investors, showing them high value of assets. So it's not good So you have to record impairment loss, and you have to carry the impairment test to make sure that your carrying amount should not be higher than the recoverable amount. So for an entity to conduct an impairment test, there must be an indication. There must be a signal, yeah, that help you to determine, help you to trigger the impairment test. Yeah, there are several assets, three type of assets where you have to conduct impairment tests annually. But for other kind of asset, you shouldn't do it only at the end of the year, but you should conduct it. You should conduct the impairment test when there is a signal or indication of impairment. It can come from the internal source and also from the external source. Yeah. So the impairment test involve comparing the carrying amount of assets with the recoverable amount. Okay. The later determined as the higher of fair value less cost to sell and value in use. Yeah, the later word later here. Sorry, the later here refer to the recoverable amount. The recoverable amount is determined as the higher of fair value less cost to sell and value in use. The later refer to the recoverable amounts. Yeah, you're going to compare your CA with your RA. What is your RA? The higher of fair value less cost of disposal. This is what you need. Fair value less cost to sell, compare versus VIU, the higher will be your RA, recoverable amounts. So the impairment test may be conducted on separate asset with impairment loss being recognized immediately in profit and loss. As many assets do not independently produce cash flow, the impairment test may be conducted on a group of assets, known as a CGU, a group of assets known as a CGU. So where a CGU incurs an impairment loss, the loss is written off against any recorded goodwill and any balance then allocated on a pro rata basis across, yeah, the business. So finally, where improvement occurs in the recoverable amount of assets, so impairment loss may be reversed for all kind of asset, but there will be no reversal, no reinstatement in the case of goodwill. Okay, that's it. Thank you so much.